Welcome to America's Heroes Group.
Welcome back to America's Heroes Group, this time with a roundtable on our partner, Katz Milanec. Today is Saturday, April 15th, 2023. April is Sexual Assault, Minority Health, and Autism Awareness Month. Our host is Kelley. I'm Sean Clem, the co-host, Army National Guard veteran. Our executive producer is Glenda Smith, and our digital media producer, Ivan Ortega, Scouts Honor Productions. And of course, we have Shakaya standing in for our technical producer and also for our technical engineer today. She's doing a lot of stuff today, basically. So Dave Milanec, he's a CPA and president and founder of Katz Milanec Incorporated, and has a family member who served. How you doing?
Oh, we're doing great today. How are you?
Pretty good. So what are some 2023 or 2022, because we're still doing that, but what are some tax filing tips or some things you want to tell us about tax filing that's so important? Because April 18th is when everything is due. And people are thinking about next year. Some business owners are thinking about next year, but some people are still trying to get under the gun, trying to figure out what they can do to get some tax write-offs. What do you got to tell us?
Well, yeah. So, what I would say to that is what you don't know, especially at this time of year, really can hurt you. And so, like right now, if you are looking at the clock and realizing, oh my gosh, I only have 72 hours or less to get my taxes filed, you don't want to rush it. There is an option. You can file a 6-month extension. It's automatic. You just file the form, you get a 6-month extension. It's helpful in the fact that you don't have to then file, and you won't be considered late filing if you don't file by April 18th. If you're not sure of what's going on with your tax situation, you should definitely take advantage of that. Even if you are sure, it's probably not a bad idea to go ahead and get that extension anyway, because there's no downside to it. There's only possible upside to it. With our returning existing clients, we provide them with a free extension at the beginning of the year. So if you're already our client, you already have an extension. If not, give us a call, 708-914-8220. But just also be mindful, an extension to file is not an extension to pay. So if you make that extension to file and you think you're going to owe, make sure you make a payment in so that way you don't end up with penalties and interest on whatever balance you have if you think you're going to have a balance.
So to walk us through it, so if a person owes money, or if they think they might owe money, say they have a $3,000 tax bill, but they don't know they have a $3,000 tax because they haven't done their taxes. Could they pay $1,000 and then do an extension and then and then pay their other $2,000 later? How does that work?
Well, they can do that. They would still. So if you think you owe $3,000 and you can afford it, go ahead and pay the $3,000 in. Because if you owe $3,000, then when you go to file your taxes, you won't have a balance due and everything will be fine. If you only end up owing $1,500, you'll get a refund of $1,500, and you'll get that money right back. If like in your example, if you only pay in $1,000, then you'll still owe $2,000, and then when you file the return, you'll get hit with late payment penalty of 0.5% per month, and each part of a month is considered to be a whole month for that purpose. But the reason that you really want to make sure to file that extension is a late payment penalty is 0.5% a month. A late filing penalty is 5% a month.
Wow.
And so that means April 19th, if you haven't filed and you don't have an extension, if you owe money, let's say you owed $10,000, well, now you owe $10,500.
And a lot of people use TurboTax and a lot of these softwares, but they're not sure if they did the right thing with their taxes, particularly people that are self-employed, because we've seen a huge rise in people filing their taxes who were in a part of the gig economy, like people that drive Uber or they're contractors. So what's the process to amend a tax return?
So to amend a tax return, especially if you're in business, you kind of have to get all your records together, and it's really better. This is why I say if you're not sure, file that extension, because it's really better right now to go ahead and just wait and make sure you have it right, as opposed to trying to trying to file something just to file something and then go back and amend it. Because when you amend a tax return, you have to provide proof that what you said originally was incorrect. Like you have to say, okay, I had additional expenses. Here's all the proof of my additional expenses. When you file an original tax return, you're not required to provide any of that proof. And when you file an amended return, you have to provide that proof for them in order for them to change the, like if you wanted additional deductions that you forgot to put on, you'd have to show them all the additional deductions, and then if they agreed with you, then they would put it on. So it's better to get it right the first time. But if you do need to do that, that's definitely something we can help you with. You'd have to get all that stuff together, and then get the records together. We'd put everything together in a package with the amended return. We'd put the original return with it and show the differences, and then we'd send it off to the IRS. It takes however long it takes right now, unfortunately, with the processing. I can't get a straight answer out of them as far as processing time right now. But once they process it, the adjustment would be made.
And then what's the risk of someone getting audited? People that do their own taxes, is there a higher risk or higher chance from what you've seen of being
so
audited?
There are certain things that if they show up on your tax return, they're considered to be audit triggers or audit red flags. I'm sure people have heard these phrases before. Basically, it's something that it's an unusual situation that typically the IRS is going to want to investigate further. So let me give you an example of that. If you are a self-employed individual, or even do some sort of a side hustle type of thing, and you only do it part-time, if you report income of less than $2,000 and you report a loss of greater than $5,000, that is something that is an audit red flag and can get you audited very quickly. And obviously, the bigger the loss, the more likely you are to get audited. If you're reporting like a $25,000 loss on a Schedule C, you can almost assure that the IRS is going to come back and ask you for proof of that. Other examples include if you show adjusted gross income of like $50,000-$60,000 and you show charitable contributions of $20,000, IRS is going to question that. Or if you're showing having an itemized deduction, but you only have $40,000 of income and you have like a $20,000 itemized deduction, IRS is probably going to question that. Basically, anything that looks out of the ordinary and doesn't really, if you thought about it, make a whole lot of sense is something that you probably want to avoid doing on your tax return.
Is real estate still a safe way to try to get losses or declare losses on income? Because people have been doing that for years. Yes.
You can use real estate. There is a caveat though. If you make greater than $100,000, every $2 you make above $100,000 limits the amount of loss that you can take by $1. Up until you make $150,000, then you can't take any losses. So you can take up to $25,000 of rental losses without being a real estate professional. I'll get into that in a second. You can take that amount of losses, and just as a deduction, you obviously have to have expenses against the income to deduct it, and then you can take that amount, and that would be I'm sorry, I'm losing my train of thought here.
No worries. So so you can take up to $150,000 you mentioned. So if you have over $150,000 in income, then what happens?
Well, there is one exception. There is one exception to that. If you are, like, for example, a lot of buildings in Chicago are like 3 flat units, right? Mm-hmm. So like if you are living in one unit and then you rent the other units out, you can actually take unlimited losses on a building like that. But you have to take the expenses proportional to the amount of the property that you're renting out. So, like, for example, if it's a 3-flat and you have the other 2 units rented out, you have 2/3 of the property rented out. So if you're paying utilities for all 3 properties, you get to deduct 2/3 of what you're paying in utilities. The property taxes, you get to deduct 2/3 of that. The mortgage interest, you get to deduct 2/3 of that. All the stuff you pay for the expenses of the home, you can get as deductions up to 2/3 of it, and then whatever losses you have, regardless of your level of income, you can take the full amount. The other thing is real estate professionals. If you are a real estate professional, and this is where, like I said earlier, what you don't know can hurt you, especially in taxes. If you are a real estate professional, which means you have 750 hours for the whole year, and at least 50% of your total activity in terms of working is done in real estate, then you actually are entitled to claim unlimited losses on rental properties, regardless of your level of income.
Wow.
So that's one of the many ways that we can save people lots of money. I've saved people just using that real estate professional exemption. I've saved people $20,000-$30,000 before. And that's kind of what I wanted to talk about. Kind of like these situations where what you don't know can hurt you, and how it can hurt you, and how we can help you to save in those situations. So another example of something like that is if you are in a situation where you have like a foreclosure, and you got your home foreclosed on, you owed, let's say, $150,000, and you got foreclosed on, you found another place to stay, and you thought it was done. And then the bank issues you a 1099-C. 1099-C is a cancellation of debt income. That means that now you have to pay taxes on the mortgage that you didn't pay. So that means you owed $150,000. Now you pay taxes on $150,000 of extra income that's taxed at ordinary income rates. So that could be as much as $50,000-$60,000. I've seen it that high before. Now, if you know how to work the code, there are actually 5 ways in the code, in Internal Revenue Code Section 108, that you can get out of cancellation of debt income. You can get out of it being reported as income. So if you can use one of those exemptions, you can take that $150,000 and completely wipe it out and save yourself $40,000, $50,000, $60,000.
And kind of run through that math for a little bit, because people don't realize that the more money you make in income, the higher the tax bracket you put yourself in.
Oh yeah, absolutely. Let me give you another example. I had a client sold a property that was a commercial property. They had invested a certain amount in it over the years, and they sold it for $750,000. And they were concerned, oh my gosh, am I going to have to pay $100,000, $120,000, $150,000 in taxes? Well, if you were to just go by the capital gains on the sale price of the property, 20% of $750,000, it would be a $150,000 tax bill, right? However, if you take the basis in the property, which is the amount you spent on the property over time, less any depreciation, of course, but they were never able to use this property for whatever reason, so they didn't have any depreciation on the property, so it was just the amount they had spent into the property over the course of the years that they weren't able to deduct on taxes, and we added it all up, and they actually had more money spent in over the course of 20 years than what they sold it for. So we were actually able to claim, instead of them paying $150,000, we were actually able to turn it into a tax loss and turn it into a tax benefit for them that got them an additional $3,000 in refund.
Wow. What I've seen a lot of times too is that people that are filing their own taxes are using different software. The software oftentimes, and I won't name names, but certain softwares that are out there seem like they're charging you just as much as you can just pay somebody to do your taxes.
Well, yeah, there are some softwares out there that if you're really concerned, like, oh my gosh, if I don't file something, I'm going to go to jail. Filing with a software like that, if you've just got a W-2 and everything like that, it'll keep you out of jail. It's not going to necessarily do anything positive for you, but it'll keep you out of jail and not keep you out of trouble with the IRS. It's not going to give you the best situation. And actually, the funny thing is, some of those softwares, the way they ask questions, can actually mislead people into. Remember, I was talking about like a $25,000 loss on a Schedule C. Mm-hmm. The way those softwares ask questions, sometimes it can actually mislead them into filing a large loss on a Schedule C when they don't even realize that they shouldn't be doing that.
So they're thinking that they qualify for tax deductions they really don't qualify for because of where the question is posed.
Exactly.
That's wild. That's wild.
Exactly.
So what are some of the things you would say to people that are trying to prepare for 2023? What are some things that you would walk your clients through to get ready for the next filing season?
Preparing for 2023, I mean, we're just getting into the start of that. So right now, if you just got done filing your taxes and you found out you owe, you'll want to sit with your accountant and kind of examine that. Why did I owe money? What was different between, let's say last year you got a refund of $1,000 and this year you owe $1,000. Well, why did that happen? Mm-hmm. What did I not withhold enough? If I have a W-2 job, if I have a business, did I not? What can I do to plan better to make sure that I'm paying things as I should be on time? Especially if you have a business, this is a great time to start getting your books and records in order for 2023, because there's only 3.5 months now that have transpired in 2023. So you can catch that up fairly quickly and kind of get a head start and be able to plan your taxes for next year. Businesses, another great example of ways that you can save that we can save you don't know, and it can hurt you. I had a client earlier this year. They had a fairly large tax bill. It looked like they were going to owe about $15,000, and then they told me, oh yeah, well I also purchased a vehicle, and I said, okay, well what kind of a vehicle was it? Did you use it for your business? Yeah, I used it for my business, and it was a I don't know, some sort of an SUV, mm-hmm. right? So I looked it up, and the SUV had a gross vehicle weight rating of over 6,000 pounds. That probably sounds uninteresting, but it's actually very interesting for tax purposes, because what it means is I can fully take depreciation on that in 1 year. So the whole price of the vehicle I'm able to depreciate in the one single year. So I was able to use that to take that person from potentially having like a $15,000 tax liability to they ended up with being able to report a loss on their business and having no tax liability, actually having a refund.
Wow. Tell us again, how can people get in contact with you? What's your website address and also your phone number?
Oh, yeah. So our website is katzmilanec.com. That's KATZMILANEC.com. And our number is 708-914-8220. Again, 708-914-8220.
Give us a lot of information to kind of think about. And also, I like the idea of, and I encourage business owners across the country, because you can do business in all 50 states, correct?
Oh, yeah, absolutely. Absolutely we can. And if you're talking about for us to be able to do the taxes, yes, right. Of course we can. We also are able to help business owners if they want to do business in all 50 states. We can help them set up to be able to do that as well.
Great stuff. Dave Milanec, CPA and president and founder of Katz Milanec Incorporated. He's also a family member of one who served with us in the military. Thanks for your time.
Thank you. Always a pleasure to be on.
This is America's Heroes Group. We'll be right back.